Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Tuesday, the 12th of November, 2019, just getting on to 4:15 p.m. Central Daylight Time. Another down day in the metals, and I think that, what's happened here is the markets have gone into a liquidation mode as the stock market has taken off. The dollar has gotten strong at the expense of a number of currencies. The yen was pretty much unchanged, and the pound, well, up 3 ticks is nothing. You also aren't getting the inflation scenario out of the energy markets. Bonds and notes today corrected a little bit. So let's take a look at what's going on. As you can see, we've been in a down wave since 1526.60, and instead of the market trying to hold into this 18-week moving average of closes, it's just dropped on it the week of November 8th, and it's continuing that drop this week. Yes, eventually I'd expect the market to challenge back to that 18-week average, but from what level is the big question. When we come to the daily chart, you can see the breakdown in the market. Now, if we back off right here, do you disagree this is sideways action? So the question, if you agree with that statement, and I don't know, is if it breaks out, is it going to the upside or the downside? But right here, I'd count that very much sideways action. And as we know, the market started to break out to the downside last Thursday, and as you can see, it really hasn't stopped that breakdown. When we put onto the chart the swing line, we get to see that you've got the pattern of lower highs, lower lows. When we take a look at what's going on with moving averages, now we're getting that play that I was telling you about, where the 18-day moving average of closes will shortly be getting under the 100-day. It would take a massive rally to stop that from occurring, because as you're adding these new lower closes, you're dropping a series of them back here. So just the way that a moving average works, that's going to happen. So what I'm looking at is strong resistance between the 1884 level and let's call it the 1889 level, right in that zone. Is the market getting ahead of itself on the downside? I'm going to answer that with a yes. And the reason is you've now got, today was under the 18, let's just see, was it? Not really. The market finished today at 1450.370. 1 tick over the lower Bollinger Band. That alleviates the prior 3 days of being under it. And I realize you're going to say to me, and you should, Ira, that's a 1 tick bounce over it. What's the big deal? 1 tick is 1 mile. As far as my work is concerned, that is what it is saying. In addition, I look at where the momentum is. And yes, I think we have an oversold market. I think it's done what we call riding the lower Bollinger Band. It hasn't had much of a bounce capability. And I'm telling you, the last ticks of the day were higher than this. They were probably $4 or so higher than this. So I won't be surprised to get a rally. The problem is I think the sellers are waiting for the market up here. And the only thing holding them back from getting too aggressive might be that the indicators that measure overbought, oversold are in the oversold territory. When we come to GLD, this is a little cleaner because you get to see how the market did step back and over the lower Bollinger Band. And one of the reasons for that is the settlement price in here is more realistic. The settlement price here is 3 in the afternoon. In the futures market, they use a 12:30 time period, that's Central Time, and that's what they determine the settlement from, and then the market trades another 2.5 hours to the end of the day. So when I'm telling you the last trades of the day, it's not that I have magic. I'm just looking at the markets and I can see what they're doing. You have to build that into your thinking. But I don't see anything real different on the bigger picture. I see an oversold market. I think the moving averages are going to converge. They're right now going to come in between 139.20 and the 140.20 level, and that's where I'm expecting the resistance to show in the marketplace. Let's go first to the GDX miners, and I've got 2 charts here. When you take a look, the low today was 25.98. You can see it right up here. That's 2 cents away from the bottom of the Bollinger Band. So for all purposes, to me, it went to the lower Bollinger Band, and you had a huge reversal day to the upside. That's where I think the short covering came in. The market stepped out of its downtrend. It no longer has the pattern of lower highs, lower lows. Now you got a lower low, and today's high was higher than yesterday's. Therefore, I think you're out of the downtrend and in a correction mode. Also, I want you to look at the sideways action of the Bollinger Bands, the black dashed lines. This market, I don't think is going anywhere. I think it's caught in that sideways action. When we get to the junior miners, you did not make your run, as I call it, to the lower Bollinger Band. You certainly were oversold coming into the day, and you had that outside day up. So I'm going to look for resistance in between 37.54, the 18-day average, the 200-day average of closes, and the 100-day, a whole area loaded with resistance from 38.20 down to 37.54. I'm going to say what I said on the futures. You're very oversold in these markets. You may not get all the power selling that I would look for, but I think it's coming. In the gold-silver ratio, this is terrible if you're bullish in the gold because it's just going much higher against silver, which means the metal market's not getting a play on it. And when you come to the silver market, you can see the settlement today was 1669.20. That is still under the lower Bollinger Band, and that gives you today. I believe yesterday you were under it, that's 2. The day before you were under, it's 3. And here you were under that number. So I have 4 days in a row. 5 is about as far as you get. So I am looking for a bounce right now to higher prices, and I think those that are caught in this market are likely to start dumping between. Right here, the 100-day average, 1717. I don't know if they'll get to that number, and the 1756 level. Have we broken the bullish pattern of this market? Yes, you have. You'd have to do a lot more work to turn friendly on this, and eventually we'll have to go to the March contract as we get up towards December 1st, and we'll roll out. In the copper market, what we noticed yesterday was how the market had broken down, and the break 265.60 broke through this low. So you broke the pattern of higher lows, higher highs. You now got a higher high and a lower low. You're making a run, excuse me, towards the 100-day average. If you can get under that, maybe you make it to the lower Bollinger Band. But you've stepped out of a trend. I noticed today that President Trump, as he was talking to the in New York to the financial council there, in his speech, when he got questioned and talking about China, he's saying the same thing. We're close to a deal. He's been consistent, but he won't do a deal if it's not right for the U.S. That did not lift the copper market, nor was it bearish. It's been consistent with what he's been saying. In the platinum market, we are down to the lower Bollinger Band and under the 100-day average of closes and oversold. I'm looking for a bounce in the market, not a trend change, a bounce in the market. Obviously, you've broken the back of this bullish spree that you had to the upside, and the market's feeling that. So all the metals in the future side of it, as you can see with the 1230 settlement price, we're down. We saw that the metals that are traded, the ETFs that settle at 3 o'clock did much better. They came back a little bit. In the palladium market, the market is now riding the lower Bollinger Band. I've said that you broke the back of the bull leg of this market. Just haven't changed my opinion. I'm still looking for sellers to show up in the 1740 area, the 18-day average of closes. Their risk might be back to the rally high we had right through here, which is 1782.50. It's not for the not faint of heart. That's a lot of money at $100 each point. That's a lot in the full dollar amount there. Next, we come into the dollar index. I'll give you a warning sign what you don't want to see. If you're bullish, you don't want to see now this 97.97 hit. And I say that because we're getting distribution against an upper Bollinger Band in an overbought market. That does not mean if it's not taken out, you can't go higher. But if you take it out, I am concerned that you could put into play a reversal back here. Is there anything other than that that the bulls have to worry about? Just being overbought. The trend is up, the bias is up, but you are overbought. So when I put it all together, an interesting time in the metal markets, and the question is what to do with them in other parts. Well, you know that we're going to start the hearings tomorrow on the impeachment inquiry. I'll tell you the markets that people are going to be watching. Metals, in stock indices. And a lot of people are going to play these micro stock indices because they're 1/10 the size. And I was reading my YouTube today, and I appreciate when you're writing it. I may not agree with everything you say, and I may agree with it. Somebody wrote, it's too small, it's not worth my time. Well, if you were so right on that comment, why are they doing over 100,000 contracts a day like in the E-mini? 20% of the full-size volume. It's huge. These are not small because people are building positions and tossing them out. Plus, if you build 10 of them, because they're 1/10 the size, they're fungible against a full-size contract. We've lowered the commission and made it a lot easier because we know people want to trade these indices. We see that all the time. The problem is you get these big moves, and can you handle them? This is one more way that you can add something to your tool chest of trading. If you'd like to find out more, you just go to our website, but instead of the full website, www.iraepstein.com, put in the / rather, and the word micro. It'll bring up a page we created to teach you about this. You can always call my staff, and to get to that page, here's a secret. If you're watching me on my YouTube video, click this icon, it'll take you right to that page. Then if you set up an account, we get you all set and ready to go. We've done the same thing on currency markets, by the way, for the very small 1/10 size ones. So we're really covering your needs, we think. By the way, people have asked, can you work with our brokers on these? Yes, for a slightly higher fee, but believe me, it's way, way down. So we realize the size of the contract and the restrictions on that. I'm going to be watching with you tomorrow what the president says. Don't forget, we have in the morning also Fed Chair Powell speaks before the Economic Joint Committee. I think it's his first time he's ever spoke before them, and the day after he's got the House Budget Committee to speak to. So there's a lot going on, and it's going to be active. I'm Ira. You have a good day, and I'll see you.